Hi, everyone. This is Rob Stanley with the EcomWhiz podcast, and my special guest today is Yamaris Diaz. She's a CPA from EcomAl. Thanks for being on the show. I really appreciate it.
Thank you. It's great to be here.
So on our show, a lot of times we talk about Amazon sellers, but in this case, we're kind of covering more of the whole spectrum of e-commerce sellers when it comes to dealing with getting your taxes ready. And one of the things I kind of, in the back of my head, I was like, wow, I bet you she's dealt with a lot of people, and I bet you there's probably a consistent thing where it's like every time she deals with them, they're either missing something or forget to do something, or they're lacking something before they start when they get their e-commerce business going. So what's kind of the first thing you see that a lot of times they either forget or they don't have in place when they're getting going?
So I think the biggest thing is not taking it seriously early on, and then just getting into a mess down the line. So I'll explain a little bit. So when I say that they don't take it seriously, it's a lot of times you're starting out your business and you don't know how legitimate it's going to be or how successful you're going to be at it. You start sourcing here and there, but you don't know if it's really going to be a legitimate business. And maybe you don't open up the LLC or you don't get a separate business bank account. So that would be my main thing. People mixing their business with their personal transactions in the same accounts. And then when it comes to tax time, or when it comes to you want to really start treating it more seriously and you want to get organized, then you kind of have a little bit of a mess in your hands. So I would say just from the get-go, as soon as you decide that you want to run your business and you're serious about it, and it helps you get motivated too, because you know that you're starting your business and you start out the right way from the beginning. It's actually a motivator to really do this. Okay, let's do this. This is a real business that I'm going to be running here.
Yeah, that's a perfect point. And just a couple podcasts ago, I had Jeff Schick. He's a attorney, e-commerce attorney out of Florida. Yeah, and so it's perfect. I'm glad you said that, because people listening, if you don't have those LLCs or incorporation, whatever it is, in place, go back, listen to Jeff's podcast, get a hold of him. But today we're going to be kind of focusing more on getting things ready as far as your finances. And one of the things I think I remember either reading or you talked about is people mixing their finances, their personal finances, with their business finances. Is that pretty common? I know I probably did it when I first started, but how common is that?
Yeah, very common. Look, we all do it. Maybe you don't have your ducks in a row at first when you start, but you're eager to start right away. And it shouldn't prohibit you from starting. It's just a matter of when you start, and when you finally have that business account in place, make those transfers, from your business to your personal account to pay yourself back for any business expenses that you had, just to make sure that everything's reflected in your business account. And yeah, it's common, but if you catch it early on, if you catch it early enough, it's not that big of a deal. Really, the issue becomes when you're a year, 2 years down the line, 3 years down the line, and you're still are mixing business and personal. That's one of the biggest issues with IRS audits, the whole commingling of funds, especially with the LLC. There's something called piercing the corporate veil. So as you know, the LLC grants you personal liability. So if someone goes and sues you, the LLC is treated as a separate entity. So you're separate from the business. So they're not going to go after your personal assets. They can go just after the business, right? So if you have an LLC and you're not keeping a separate account for your business, and even if you have a corporation, you're not keeping a separate account, you could be doing what they call piercing the corporate veil, and they could potentially go after your personal. They could go after you personally.
Because you're commingling, right?
Exactly. If you're using personal credit cards to purchase stuff, and I'm sure, you mentioned Jeff, I'm sure he'll tell you, or he told you in the interview, or maybe you've heard it from him before, having an operating agreement when you open up your LLC. That's huge. A lot of people just go into their state website and open up their LLC, but they don't have an operating agreement in place. And that is very important as well, to make sure that you're getting that protection from your LLC.
Yeah, absolutely. And I mean, I probably did it. I'm sure a lot of do when they first get started. And you're absolutely right that a lot of people, I mean, when you're first starting a business, you're not even sure it's going to be a business. You're kind of just figuring it out and you're trying to get it going. And, you're so concentrated on, finding these products and getting them to market and trying to sell them and setting up a website possibly, or getting on Amazon and selling it, that, you know, you kind of almost forget that, hey, you should really be keeping track of this. And, you know, I think you also mentioned at one point that on a thing I read that you had an interview you had done about a bookkeeping system, right? Getting that in place early. Is there one better than another? Or, I mean, there's so many of them out there now. What do you usually recommend to your clients?
Well, I usually recommend QuickBooks Online. That's my favorite one. And, you know, the bookkeeping system and what we were talking about before, just being organized and having something in place. You know, people look at it as kind of a chore. Oh, it's just another thing on my list that I have to do when I open up my business, and just like a chore that you procrastinate on because, I hate accounting, I hate taxes, you know, I don't want to have to deal with this stuff. But people don't realize that they could be losing money. You know, if you forget to enter that expense, or you forget that receipt, or you forget that you bought with this personal credit card, this inventory, you're losing money at the end of the year if you're not reporting that deduction on your taxes. So that's what I think a lot of people you know, don't realize. So yeah, getting a bookkeeping system going. QuickBooks Online is my favorite, but there's other free ones out there. If you're just starting out, QuickBooks Online may be intimidating for you, or you can't outsource it yet. You know, there's Wave, there's GoDaddy. Those free ones are the ones that are most popular among sellers. And you know, the main idea for that is just to save you time. Automate your accounting as much as you can. Those software, you know, they're all cloud-based. They sync with your bank accounts. So you're automatically bringing in your transactions from your bank statements and your credit card statements. And all you have to do is go in there and categorize it and say, okay, this $500 purchase at Walmart was inventory, or whatever it may be. So it kind of saves your life a little bit by just making sure that you're being organized. You know, even Excel may be okay when you're first starting out, but I tend to err on the side of caution by recommending Excel, because there's potential for human error in Excel, you know, and you're entering stuff. So I always like to say, use the software whenever you can. Get familiar with it, try them out. Most of them are free to try out online, and see which one speaks to you the most, which one do you think that you can handle, and just go online. There's YouTube videos for everything, and you know, just get something going that you feel comfortable with.
Yeah, I mean, the point being, have something, right? Like have something first, so that way at least something's in place there for you to be able to put all of it together. So that way somebody like yourself, a CPA, can get to it and take a look at it. And then as you grow, you can look at things like QuickBooks and other types of software. But, you know, start with something in place, because even if you're running a small business and you're just getting started, you're going to pay taxes at the end. I mean, either way. So even if you actually don't have even a lot of sales, right, you're still going to have to pay something, or you're going to get something back from it. So you got to definitely have some software in place to be able to get going with that. I ran a business for 20 years. I remember at the end of the year, every year, since we just finished the year and we're starting a new year here, man, I remember going out and having to deal with counting inventory. Some of the Amazon people probably have to get an inventory count from Amazon or know how many they have. Is that always kind of a big issue at the end of the year and going forward before you do your taxes, is make sure you got that inventory count in place?
Making sure what your inventory balance is at the end of the year.
Yeah, or that too. Yep.
Oh, your inventory account. I mean, yeah, it's gonna vary by seller, and it's gonna vary on the tax method that you use for inventory. But if you're keeping an inventory balance in your books, which I recommend, then yeah, that's something that takes a little bit getting used to in terms of like putting that information together. Important for you to know is what was your inventory balance at the beginning of the year, and what was the inventory balance at the end of the year, and what were your inventory purchases throughout the year. So the purchases are easy. You can just grab that from your bank statements and credit card statements. Your beginning inventory balance, hopefully you had, but let's say that you started selling in 2019, then it would be zero if you started with zero in January. And then the ending inventory, there's a way to pull a report from Amazon that tells you at the end of the year everything that they have stored for you. And then you would just need to export that report, assign the unit costs, that the cost of the inventory, what it cost you, so you could come up with a total dollar value for that total inventory. And you know, you can't forget any inventory that you have stored anywhere else in your house, your basement, in a 3PL, wherever it may be, and you sum all that together, and that's how you get your inventory value at the end of the year.
Yeah, and that's important, right? I mean, that can impact your finances. You know, you have correct information on how much inventory you have, because that will definitely impact your finances and your taxes.
Well, yeah, your cost of goods, it plays into your cost of goods sold. So you need those numbers to arrive at your cost of goods sold, which is going to be your biggest expense and your biggest deduction on your tax return. So that's very important for sure.
Yeah, absolutely. Yeah. And then the next question I have for you, and my wife pulls her hair out because my wife does accounting, is reconciling the books. So let's explain what that means and how often should people do it?
Okay, so a lot of sellers start doing the books themselves, which is perfectly fine. And you either do it manually, or you enter the ins and outs in Excel, or maybe you already took the next step and you got software like that we were talking about, like QuickBooks Online. And you start categorizing your transactions, you start creating rules, because it saves you time. It is really nice when QuickBooks Online recognizes that a certain expense is the same category, and you just kind of automate that, and you're going and you're feeling good. But at the end of the month, people are forgetting the important step, which is reconciling your books. And pretty much what that is the process of matching the transactions that are in your accounting records with the corresponding lines in your bank statements. Yeah. So even if you have automatic syncing in your bank account, you could have like duplicate transactions, or you could have missed transactions if you're not going through that process. So with this automatic syncings, the bank and the software talk to each other. But sometimes banks, which is very common, they're updating their systems, and maybe they're doing an update and they stopped communicating with the software. So that could result in missed transactions for you in whatever time it took for them to update their system. So that means missed money, because if there were expenses and you just go and give that to your accountant at the end of the year and you didn't reconcile your books, well, maybe there were like $10,000 of expenses of transactions that didn't go through, that are not reflected in your QuickBooks, that you could be deducting on your tax return.
Yeah.
So that's the biggest deal.
Yeah, that helps you. I mean, that's going to help you, if you have that in there, and those are deductions you could take. So, and one of the reasons I wanted you on is we got tax season coming up here pretty quick. So that's definitely, great information. So speaking of that, it's like you need an accountant on your side, and somebody like yourself, you're an accountant online, right? So basically people can get a hold of you. And one of the things we were talking about earlier, because you're based out of Florida, is I asked her, just because I wanted to make sure, is, well, do you need to have an accountant that's local, or can you use somebody online? And why don't you tell them what your answer was to that?
Yeah, like you can. Although CPAs like myself get licensed in a certain state, you are allowed to do taxes and practice across the United States. So I have clients across the United States. So I am, I can legally do your taxes if you're in another state. And, as it's important to know, like just with the e-commerce world, we're online, your online sellers, you're considered remote sellers, remote retail store owners. So it's the whole sales tax thing comes into place, and it's just kind of the nature of the business that we have like it all goes across all the states. So it's not just in one state. So having knowledge in the tax laws across all the states, and it varies. But yeah, the long answer short, yes, we are allowed to practice across multiple states, and you can hire an accountant that's not local to you. So
awesome, that's great.
Yeah.
Another question I saw when I was going through your Facebook group was like, at what point or when should I issue a 1099? Maybe explain a little bit what a 1099 is, and kind of scenarios where you need to issue a 1099.
Okay, so basically when you think about a 1099, you're thinking about someone that did services for you. So a service provider, an individual person, maybe a subcontractor that you had, maybe somebody that you paid to do some website designing for you, something like that in the normal course of your business, right? So if you paid them more than $600 within a calendar year, then you're going to be required to issue them a 1099 form. So what that means is just a form that you have to send to the IRS, and you have to give that person so that they know that they have to pay taxes on that amount that you paid them. So essentially, it's going to be any person or company that you paid services that isn't your employee. There are some exceptions, if, for example, if they're a corporation, an S corporation or a C corporation, then you don't have to issue them a 1099. And the way that you find that out, a really good best practice and tip that I have for you is, as soon as you're getting ready to pay the first payment to a vendor that you contracted, make sure that you get a W-9 filled out from them. So what that does, the W-9, it's just a very simple form that they fill out. They tell you your name and they tell you what kind of entity they are. And you'll know right away if they're an individual or a sole proprietorship, you have to issue them a 1099. If they say that they're an S corporation, even if they're an LLC but taxed as an S corporation or taxed as a C corporation, then there's an exception there. You would not have to give them out a 1099. And then the other thing to keep in mind is if you're paying through credit card or through PayPal, for example, you don't have to issue those service providers a 1099 either.
That's because it's already done through PayPal and other services?
Yeah, exactly. It's done already by that platform, so they will be required to send out the 1099. So that's if it's done through, so for PayPal, for example, if it's done through the business PayPal account.
It has to be a business account, right? Through PayPal. Yeah. Gotcha. And then I had on my notes to ask you about common deductions. So why don't you maybe elaborate a little bit on what are common deductions and why you shouldn't forget about these common deductions?
Okay, so well, let's go back really quick to the whole idea of having the bookkeeping system in place and doing the reconciliations that we talked about. Make sure that you're doing that and you're not just relying on manual input, so that you don't miss any common expenses. I would say for Amazon sellers, your ad spending, remember anything that you spend on getting your product name out there, any advertising, that's huge for people, and also the PPC is one of the biggest expenses for sellers. Don't forget all your Amazon fees. You're gonna see that in your Amazon reports. Make sure that when you are reconciling your books and you're looking at that cash that comes into your bank account from Amazon, that you're not just saying that sales in there's fees that you want to split out. Shipping expenses. One of the big ones for sellers that most sellers will have is that they're going to be working from home. So your home office deduction, make sure that you're getting a home office deduction. If you don't know what it is or you're not already getting that, talk to your accountant to see if you would qualify for the home office deduction, because there are rules there. The main thing that you have to remember for that is that the space that you use, that you consider your home office, has to be exclusively and regularly used for your business. That's the main rule there. And also mileage. A lot of people that do retail arbitrage are using their car a lot to go out to stores. Don't forget to keep track of your miles, because maybe you think it's just a short trip here and there, but it does add up, and that could be thousands of dollars in deductions at the end of the year.
And they should be logging that each time, right? Where it was from, where it was to, because some people might just be here's at the beginning of the month, here's my mileage at the end of the month. And this is where we were talking about earlier, people mixing personal with business. You should be logging, I went from here, my house to this store, and maybe, if they're keeping a log of what they bought or didn't buy, if they didn't find anything, but it should be each trip, right?
Yeah, it should be each trip, round trip. So keep a log of that. I mean, the easiest thing is just to keep a notebook in your car.
Yeah.
But if you're not going to be diligent with that, there's apps out there that just they notify you as soon as they see that you're in your car, and the app just asks you, was this a personal trip or a business trip? And that's an easy way to do it.
Yeah.
I think Mile IQ comes to mind. They do that. Or you could just, if you have a good memory, just at the end of the week, jot it down in Excel. These are the trips that I took. This is the mileage. Just anything, but yeah, because if you do get audited, the IRS does require you to have that documented.
Yeah, and I guess if you forget at the end of the week to do it, you could always go back on Google Maps or something like that, say directions from my house to Target or something like that, and how many miles is it? At least to get you a rough estimate of how many miles it was.
Exactly.
And
yeah, Yeah, don't forget, just any travel like that. If you're traveling to suppliers, if you're traveling to any like mastermind meetings or any meetups, you're traveling to anything, any business conferences, anything business related. A lot of people wonder. And yeah, that's all deductible. And your meals, 50% deductible. Entertainment is not deductible anymore per the most recent tax laws, but meals still are. They're 50% deductible. So any meals that you spend that are business related, don't forget that you can deduct those too.
That's awesome. That's awesome. Well, before we jump into your background, did you have any more time? I mean, you're giving tons of tips here for people. So obviously they'll want to, re-listen to this podcast a couple times, write those down. But if there's not any other tips, let's talk about what brought you into starting Ecom Owl as a CPA and getting going with this. Kind of back us up a little bit. Tell us how you got started in the CPA world and how you got to start opening Ecom Owl.
Okay. Well, I started my career over 10 years ago, and I started at Deloitte, which is a Big Four firm. And I was a newlywed at the time, and I would get home sometimes at 11 o'clock at night, and then I quickly realized that just wasn't going to be the life for me. I did not want to, just the way that I saw my future, I did not want to just be working for like in big corporate America. I did not see that for myself. So I kind of did have the entrepreneurial bug kind of early on. I'm an immigrant. My parents won the lottery. I was born in Cuba. They won the government lottery, and we were able to come to the United States thanks to that. So as any immigrant will tell you, very hardworking family, and I just feel like, I was put here in this country for a reason, and I did not want to let my parents down. So I've always been hardworking, and I saw my mom start her own business. And then when I met my husband, he came from a family also of entrepreneurs. So I kind of always saw that. And so I always kind of had that influence. So when I had my kids, your priorities change when you had kids. And I quickly realized that I wanted to, although I had a great job and it was a very flexible job at the local firm where I was at, I realized that I wanted to do my own thing and just make my own schedule and have my own hours. And I always told myself, if I have my own business, it's not going to be an accounting business. That's not what I'm going to do. Because I didn't picture myself like having, the brick and mortar and having people come into my office. But like in this day and age, you can make your business whatever you want. I could make my firm a virtual firm if I wanted to. Sure. And it played really well with the e-commerce niche that I had picked, which a little background about that is my husband is a seller. He got started selling years ago, and he was actually my first client. So the e-commerce business and Amazon business is personal to me. We live it every day. My husband's a seller. My mom's actually a seller now too. Yeah. And so, I just became, I learned all about it, and I just got passionate about it. There's, a big community down here in Miami where I'm from of local sellers, and we see them often, and I'm just like really passionate about helping them whenever somebody comes up to me with a question. So that led me to create also a Facebook group to kind of like funnel in those questions and like make sure that whoever has a question has a place to go to specifically to accounting for online sellers.
Yeah, give them the name of the Facebook group. That way they can come join and ask questions.
Yeah, it's called The Profit Principle. It's called The Profit Principle Accounting Group for Amazon and online sellers.
Perfect. And then also everybody, you can obviously reach Yamaris at ecomowl.com. And if you need help with anything with your taxes or CPA help or questions, maybe some of the people getting started early can contact you so they don't make some of these mistakes that we talked about. And I really appreciate you being on the EcomWhiz podcast. And thank you so much. And I look forward to hopefully someday we get to meet.
Oh, great. Yeah, thank you so much.
Please subscribe to our YouTube channel. And for more information, please visit FeedbackWhiz.com.